Hello folks, so a good week for SoundHound amidst the correction in the broader market, but I don't think we're out of the woods just yet. In this video I'll talk about the state of the broader market and why next week will be crucial, and SoundHound's price action plus prediction for the next 2 weeks leading up to earnings. Before we begin, most of you are not subscribed, so please hit that like and subscribe button to get instant updates when I post SoundHound videos. And also, I'm not a financial advisor, so take all my content with a grain of salt and seek professional financial advice if you need to. So whether we see $3 or $6 in SoundHound next depends on what the broader market does before SoundHound releases earnings in May. And the two big factors moving the markets right now is big tech earnings and macroeconomic data. But first, let's go over what happened to the markets on Friday. If we look at the Nasdaq, although it rallied on Friday, it really shouldn't have because of the hotter than expected inflation readings. As you can see here, the market was expecting a core PCE of 2.7% year over year, but we got 2.8. Headline PCE was hotter than expected also. This suggests to me that either the market is shrugging off slightly high inflation numbers now, or that Friday's rally was fake and that we're going to see more downside next week. Furthermore, although Microsoft and Alphabet saved the day on Friday, we still have a couple of Mag 7 stocks reporting, and that includes Amazon on Tuesday after hours and Apple on Thursday after hours. We saw how sharply the market sold off on Meta's earnings, which were actually pretty good. They just gave a poor guidance. If Amazon and or Apple disappoint in any way, we could see a similar sell-off in stocks and make new lows. That's the big tech earnings side. Let's move on to the macro stuff. Next week is going to be one of the biggest weeks this year in terms of macro data. On Wednesday morning we have the ISM PMI data for April, and in the afternoon we have the Fed rate decision followed by J Powell's statement, and finally the unemployment and payroll numbers on Friday. Let's talk about the ISM PMI data first. This is also called the ISM Manufacturing Index, and it's a monthly gauge of manufacturing economic activity. It's more timely than GDP data because it's reported monthly as opposed to quarterly like the GDP. So if this number is above 50, it means the manufacturing economy is generally expanding. Currently, the market is expecting 50.1 for April, which is a very small expansion. If we get a number below this, the market will like it because it means the manufacturing economy is slowing down, which might bring forward rate cut expectations. This is good for equities. Moving on to the FOMC meeting on Wednesday afternoon. The Fed is probably not going to do anything to the Fed funds rate, but if J Powell talks bearish in the speech afterward, it could get ugly for the markets, but I reckon he'll take a measured tone and it won't affect the markets too much. There's not going to be an update to the dot plot in this meeting either, which is the Fed's projection of the Fed funds rate, so this is probably one of the smaller impact events next week. The bigger ones in my opinion are the unemployment rate and non-farm payrolls. The unemployment rate will be released on Friday morning and it is expected to be 3.8%. But if it comes in lower than this, like 3.7, then the market will probably sell off because it means the Fed will have to hold rates higher for longer, which is bad for equities. The weird thing is if the unemployment number rises. Historically, rising unemployment off a low usually means the market will sell off in the medium term as it begins to price in a recession. However, in the short term, especially in the current environment, I think the market will actually rally because it means the Fed is now more likely to cut rates soon, which is good for equities. If we get the expected reading of 3.8%, the market will probably go up too, but it depends on the other piece of crucial economic data we'll get on Friday, and that is non-farm payrolls. The market is expecting around a mid 200k number, but we've had several months of blowout numbers, so if we get another huge surprise to the upside, the market will probably sell off sharply because it means labor demand is high, which may add to inflationary concerns. You might be asking, why do we care about non-farm payrolls when we have the unemployment number, which shows us the big picture? Well, according to this website, non-farm payrolls provides us with a short-term look at the labor market, whereas the unemployment number provides a more long-term perspective. It also says that when the economy is weak, non-farm payrolls turn negative before unemployment rises. Let's take a look at the chart that depicts both unemployment and non-farm payrolls together over time. So if we look at what's happening now, it appears unemployment has bottomed out and is rising. This usually foreshadows a recession, as we can see in 01 and 07. However, payrolls should be decreasing now, but they aren't. So I think there's a real risk that unemployment actually falls even further. We saw this in the late 1960s when unemployment went as low as 3.4%. Now, I'm not saying that it's going to happen again this time round, but if it's happened before, it can happen again. So let's say unemployment drops and payrolls come in above expectations, then I think the markets will sell off in the short run, but recover in the coming months because it means the underlying economy is quite strong. So there was a lot of info and a lot of what ifs. But what do I think about the markets next week and how am I positioned? Well, last week I was 80% sure that the correction is over, but now I am only 50% sure that it is. This is simply because of the higher than expected PCE numbers on Friday and the fact that 10-year treasury yields are still elevated. If you look at the 10-year treasury yield, it looks like it wants to test the 5% high set last year. That would be bad for equities. Due to this risk, I'm still somewhat hedging my stock portfolio by short selling Nasdaq futures. If we do go lower, I reckon the triple Qs will go down to the 200-day EMA, which is the blue line here. That's about a 7% further decline from current prices, which is not a huge amount, but it'll rattle a lot of investors. However, if all this worrying is for nothing and the markets continue to go higher, I'll probably close my shorts at around 440 in the triple Qs. Right, finally, let's talk about SoundHound. All in all, it was a pretty constructive week. We bounced off the long-term support on Monday and continued to go up for the rest of the week, except on Wednesday. This is the first significant rally since the stock started falling last month. If the broader market doesn't fall next week, I expect SoundHound to reach $5 easily. If the market has a really good week and that continues in the week after, SoundHound can get to $6 before its earnings report on Thursday the 9th of May. I picked $6 because it's the first major level of resistance. If we get there by earnings and we get some good numbers, we might even break through to $7 and beyond. But let's say the market tanks next week. If that happens, I reckon SoundHound will likely retest $3.50 at the 200-day EMA shown here. As for my SoundHound position, I'm still holding and looking to buy more, but I'm going to wait until the current volatility in the broader market settles down. One last thing I noticed today that may be related to SoundHound is that Apple is in talks with OpenAI to put an AI chatbot into iOS 18. We all know that Apple has fallen behind in the AI race and it basically has no choice now but to use external AI technology. AI chatbots are good and all, but what about Siri? Is there scope for SoundHound's voice AI to enhance or even replace the aging Siri? Anyway, I'm just speculating here, but if we get even a sniff that Apple is in discussions with SoundHound, then the share price might jump as high as it did after Nvidia disclosed its stake in the company. Speaking of Nvidia, let's take a look at how it's doing. It's important that Nvidia continues to rally because it's the current leader of the AI/semiconductor sector and also is a key shareholder of SoundHound. Over the past few weeks, Nvidia has been declining, but last week it made a decent recovery to make back more than half the losses. Nvidia is not going to release earnings until the second half of May, so it might just bounce around the $800 to $900 range until then. There is also the chance that Nvidia and SoundHound could provide updates on their Nvidia Drive collaboration over the coming weeks, which would be something the market might react positively to. So in summary, it's going to be an exciting next 2 weeks. If you haven't already, please click the like and subscribe button to get more SoundHound updates. Thanks for watching and see you tomorrow.